You're watching France 24 live from Paris. Time now for the business update with Stephen Carroll. Let's start with the markets here in Europe. They've just opened. What's the story?
Yeah, it's a fairly flat opening to Friday's trading. All of the main European markets opening in the red, not very far down though. We can see the different European markets opening on the Paris and London, both down. That you can see there. Madrid's IBEX flat enough, actually, just down 0.07%. Germany, meanwhile, the figures showing the government ran a budget surplus of 8.5 billion euros for the first half of the year. The Asian markets had started Friday in the green after being buoyed by positive industry data from Europe and China. It didn't stay that way entirely, though. As you can see, the Shanghai Composite turned into the red before the end of trading. Over on Wall Street, trading on the Nasdaq was halted for 3 hours on Thursday after a computer glitch caused the systems exchange for publishing share prices to be affected. Let's take a look at what happened when trading was suspended. You can see the flat line there signifies the period from when the market was frozen. Now, the Nasdaq hosts some of the biggest names in technology. Facebook, Google, Apple, all traded on the Nasdaq. The exchange said it wouldn't cancel any orders stuck in the system, but customers could choose not to continue with their trades if they so wished. This isn't the first time Nasdaq has been hit by glitches. It was fined $10 million over Facebook's disastrous share launch in 2012. This outage, the latest in a series of technical problems that's raised questions over the reliability of electronic trading.
The question is, have we built a market structure that is fail-safe? And in this case, it looks like we have. The market was shut down, and Nasdaq, took their time to get the reopen right. Rather than with Facebook, where they rushed and messed up and generated losses in the hundreds of millions of dollars, here they took their time, and at first glance, it looks like they had a fair and orderly reopen of the market.
Now, despite the fault, the US markets did end the day in the green. The Nasdaq closed up over 1% as trading ended there. Shares in OMX, the company that runs the Nasdaq exchange, fell by 3.4% though after that glitch. Worth pointing out, not just technical problems that can cause an exchange to fail, though. In 1994, the Nasdaq had to be suspended after a squirrel chewed through one of their power cables. Let's move on now with a look at some of the day's other business stories. And Yahoo has surpassed Google in US web hits in July. It's the first time in 2 years that Yahoo's websites have had more visitors than Google's, according to a survey by ComScore. But Google, which owns the video site YouTube, is still far ahead in terms of advertising revenue. It's expected to generate almost $39 billion this year, with Yahoo's figures forecast to be closer to $4 billion.
Shares in the American fashion retailer Abercrombie & Fitch have plummeted after the company reported a 1/3 drop in its profits. Its share price fell 18% on Thursday after the weak results, which it has blamed on consumer belt tightening. Rival brands American Eagle and Aeropostale have also posted disappointing sales figures for the second quarter.
And the ratings agency Moody's has warned that it could downgrade America's 6 biggest banks over the US government's overhaul of the financial sector. Wall Street reforms passed in 2010 banned the use of taxpayer money to bail out banks and outline a plan for a mechanism to wind up troubled financial institutions. A downgrade would indicate that bondholders would be expected to shoulder more losses in the case of a default.
Moving to the technology sector now, we've seen Samsung and Apple have revolutionized the telephone market with the smartphones. They are the leaders in that smartphone market. Now they're setting their sights on doing exactly the same for watches.
Yeah, that's right. Apple and Samsung both set to launch versions of the smart watches. Apple's largely expected to be called the iWatch. We're still waiting for the announcement of when that might come. Looks like rival Samsung will make it to the market first. Luke Schrago now reports on the new battleground in smart technology.
Right on your wrist, the daily weather, text messages, or maybe even a little music. Who needs a smartphone when you have a smart watch? For many people who've already bought into the concept, it's about convenience.
When you see the size of smartphones today, which are getting bigger and bigger, it's nice to be able to leave it in your pocket and only have to look at your wrist to read an SMS or an email.
Some people might just see it as a gadget, but it's a major potential market for large manufacturers. 330,000 such watches were sold around the world last year, but sales next year are projected to hit 5 million. Tech giant Sony already has advanced models on the shelves, but other firms are making plans to move on a watch market that's worth some 45 billion euros.
We're all waiting for Samsung and Apple to lead the market to see what they'll bring out and how everyone will follow behind them.
Samsung's rolling out a smartwatch in the weeks to come, with an Apple release set for spring next year, and speculations running rife over just what it might look like.
And finally, Stephen, some unexpected good news for workers at the retailer in the United Kingdom, John Lewis.
That's right. The company's set to pay its staff some 46 million euros after it realised it had been underpaying some of them for the past 7 years. Now, around 80% of the country's 85,000 employees will get an average payout worth around 400 euros. The miscalculation comes from holiday pay, which for staff that work Sundays and bank holidays. John Lewis, of course, owned by its employees. They regularly benefit from share dividends when the company does well. Most recently, in March of this year, they received an average 17% of their salaries, or around 4,600 euros. Not bad for a day's work.
That's a pretty respectable bonus at the end of the year. Stephen Carroll, thank you very much for that business update. You're watching France 24 live from Paris. Time now for the International Press Review. And for the International Press Review, joined in the studio by